This is Rod Kusin and Spooman for Risk for Tuesday, January 25th, 2010. All times on the chart are Central Standard Time. We're going to take you through an interesting entire day's worth of trading based on some significant things that our traders saw develop during the course of a relatively volatile day. Now, the first thing that we take a look at is our trend indicator. Our trend indicator at the open is green, so our first trade is going to be long. At 8:56, the system gives us a long trade, which nicely hits our 8-tick profit target here, but does quite a bit more. Nevertheless, there were some significant things that developed almost immediately after that trade was taken, which gave our traders a heads up as to what was about to happen, and in fact, for the rest of the day. That information comes from the premium. Right in here, we took our long trade. Moments later, the S&P premium hit a new low. That indicated that the market was likely going to be retracing back to 84.75. Nevertheless, the market moved up, hit our profit target. We hit a new high on the premium, which takes place at 9:01. That told us a lot about the rest of the day. Let me tell you what it told us in the trading room. It gave us good reason to believe, as long as we didn't get a new high on the premium after that, that the market sometime during the day should return to at least 88.50. So our expectations were to go long on a pullback, holding that trade, so long as the trend agreed, holding that trade all the way back up to the high that occurred at 9:01 a.m. Now, we already knew that the premium told us that the market was coming back down, but the trend to take a short trade didn't occur immediately. A couple of other things that took place, as you can see right in here, we had new lows on the premium here and here on the NASDAQ premium, indicating that the market would be continuing to move down, which, as you can see, it did. Now, as the market moved back up, the point was, could we look for some opportunity to get into the trade? Here between 9:21 and 9:57, did we have anything that would indicate what direction we should trade in? We look at our long trades, and nothing really takes place to speak of until right in here. At 9:40, our trend trade said go long, and in fact, both of those trades hit their profit target. Now, we're not going to talk too much about our retracement lines until a little later on during our discussion here, but that trade gave us a nice long trade hitting our profit target. When we go back and we look at the trend indicator going into 10 o'clock, we can see that this trend indicator is losing strength. And long trades at this point in time are now really questionable because the market breadth indicator here is dropping. Our Z-score indicator is dropping. This is on a 15-minute chart and very accurate. Taking long trades in that period of time and holding them for very long was simply not going to be a wise decision. But now come 10:30, let's get that back here, right in here at about 10:30, here's 10:45, that's the completion of the bar at 10:45. Our Z-score indicator is beginning to show evidence of a change in market direction. So when we distill this back down to a tick bar chart, here's what happened. Our indicators gave us a long trade right at 1031, which hit our profit target, came back down to 1050 after the change was even more noticeable, and came back and hit our profit targets once again. All the time we're using an 8-tick profit target. But as the market continues to move up, some interesting things happen again. And what happens is right at 1111. Now I've placed a red arrow down there. I put that on here manually for the sake of reference so you could see what we were seeing as we read the premium. Look at our premium indicator at 11:11 a.m. At 11:11, we have a new low on the S&P premium. We're in trouble. What we mean by that is that this indicator is telling us that the market is going to drop back to at least 1281. It may continue to rally up, but it's coming back. So let me use this as a point of reference for you. Here's 1181, all right? And just to show you that the premium was right, market came right back down and even went further. So we knew at 11:11 that this market was more than likely going to come back down and we should be looking for a short trade. Now, by the way, when I say more than likely, I really mean that. I don't mean it might happen. The probability is extremely good, better than 90%. The premium doesn't lie. And so here, while the trend was long, we're now looking for evidence that the trend is going to change. It's going to go short, and we're going to take a short trade. How did we know that? Because of the low on the premium at 11:11. But there was something else that also told us this. Just before 11:11, this retracement line right here was formed. So while we reached our profit target, a retracement line had been formed right in here. Our retracements are better than 86% accurate. On many days, they're more than 90% accurate. So we have both the premium and our retracement that says, in this case, we're going to come back down to at least 1280.50. So once again, what we need to see is some indication that the trend is changing. So let me go over to our trend chart that is being calculated on a 100 tick bar chart. Okay, let me show you this. All right, here we've taken our indicator, and what you want to look at is the yellow line here. This yellow line goes negative right in here, right where I've placed the red arrow. The trend is changing. So sometime after here, we're looking for a short trade. We know the retracement, which is right here. That's 1280.50. That the probability is very, very good that the market's going to drop. So where does our strategy take the short trade? It starts taking those short trades right in here at 1245 up to 1251. It's shorting, it's shorting, it's shorting. Now, something that some of our more advanced indicators know to watch for, we had this white retracement line. As the market was dropping, this retracement line formed. Very high probability that that level is going to be hit. It was, and immediately after it hit, it tanked. So some of our traders feel comfortable taking trades even in the presence of a retracement line. Some of them do not. But in any case, we knew the market was heading back to 1280.50 or better, which, as you can see, is exactly what it did. It now hits that target shortly after 1 o'clock. But what about that new high on the premium that occurred at 9:01? Well, as the market continued to drop, you notice that we have several white retracement lines above the market. One way back up here at 86.50, then we've got others below 82 here. All of this indicates to us a high probability that the market's going to turn and start to go long. So all we need now is to have some indicator to help us to see where the trend is changing and ultimately when to take the long trade. So let's go back to the trend indicator that's being plotted on the tick chart. That indicator is right in here. And it's telling us that we're going to start going long right as this yellow line, which is a leading indicator, this yellow line begins to move up. That's where we're going to start looking for a long trade. So as you can see, it's hit a low here. It's starting to move up. So what we want to do is buy on the dip. We're moving up. We want to buy one of the dips. Where does the strategy tell us to do that? We get this long trade right in here at 13.50. That's just a little bit premature, but not enough to get us too concerned. We know that the trend is up, so we're long, and we're hitting profit targets either by way of our 8-tick profit target, or for those that recognize the pattern, we could have held the trade much, much longer. We've got retracements here close to 82. The entry is here at around 78.50. We've got 86.25, 86.50 as a goal, but more important to that, we have 88.50 as where the market was when the premium hit the high and was still an active high at 9:01 a.m. this morning. So that was really the goal. What happened? In a yellow day pattern, we will always exceed the morning high in a yellow day pattern. It didn't go above 88.50 at the close, but it certainly did in the after hour market, and it's still going up. That's a true yellow day pattern. And that's just what we had, and it was just what we expected, and we knew that at 9:01 a.m. this morning. Now, what about tomorrow? We've got numerous retracements below the market, 88, 82.50, 78.75, 77.25. Whether those will get hit right in the morning or not remains to be seen, but those are our retracements below the market as we move into the cash side to the market after the opening bell. And I should clarify the cash and the futures, because all we got right now is the cash side to I'm getting my tongue tied here. It's late in the day. I'll say this right yet. Here we go, one more time. We're looking for those retracement lines to get hit after the opening bell tomorrow when the cash side resumes. So, that having been said, this was a successful day once again. We love the indicators that we're working with. The strategy is effective. There is a bit of learning that you need to go through in order to be able to read the market as we just discussed it today. You need how to learn to read the premium. Beyond that, following our indicators, following our trend indicators in particular, and knowing when to take these trades is not too difficult because the system is automated. So with that thought in mind, we invite you to come and take a live demo. We usually do an initial demo after the close so that we have plenty of data to review with you. We don't want to overwhelm you, however, and although that is possible, we know that the kind of information that we look at is information that very few people even know about. So we just want to take the time to make sure you understand things. But ultimately, the value is in taking our course. It's a live video training course that you can download right off our website. And we have a live trading room as well on Pal Talk. That'll help to answer other questions that you have during live trading hours. So we have much to discuss with you, but I'm tired, so I'm going to finish this up, and we'll look forward to hearing from you in the days ahead. This is Rod Kusin and Spooman for Risk.